the names you read have migrated into our top 10 because we have concentrated our holdings towards our highest conviction names. Tesla has been the best case in point, and I think we have a lot of Tesla-like stocks in our portfolio.
In recent years, public confidence in the electric vehicle industry has reached an all-time high trend. ARK Invest, a Cathie Wood-led investment management firm, has been at the forefront of advocating this awakening. As she was mentioning her predictions, she shocked everybody with her words, mentioning that Tesla stock will double in its size in the year 2022. Hello and welcome back to Wall Street Winners. In today's video, we'll discuss Cathie Wood's predictions on the stock and why she thinks that Tesla will double its stock this year.
You'll see many of the same stocks, but in growth, you'll see the FANGs, you'll see Microsoft, you'll see Tesla because it was put in the benchmark finally.
You won't concede that? You think all of these stocks that I read on that list, plus others that are down by significant amounts as well, are really going to come back to the prior levels they were?
Absolutely. Absolutely. And beyond.
Cathie Wood rose to prominence as a portfolio manager in 2020, partly to investments like Tesla that focused on innovation. In 2020, the ARK Innovation Exchange Traded Fund ETF, ARK, returned a whopping 153% but lost roughly 21% in 2021. She recently released her Big Ideas for 2022 report, in which she stated that electric vehicles were on their way to sticker price parity with gas-powered vehicles. To put it another way, electric automobiles will soon cost the same as or less than gasoline-powered vehicles. Another point they brought up was the fact that as the range of electric vehicles grows, so does the price. Range and pricing are two most major impediments to client adoption. EVs, on the other hand, have steadily closed the gap, making it easier for existing consumers to make the switch and for new customers to adopt a relatively new car technology from a financial standpoint. ARK Invest predicted that EV sales would expand eightfold or 53% annually from 4.8 million units in 2021 to 40 million units in 2026 at the recent Big Ideas Summit. Tesla, according to Cathie Wood, would take 25% of the global vehicle market in 5 years. The worldwide vehicle market is worth about $85 million currently. In 2025, let's say it's 100 million. Tesla is on track to produce 25 million vehicles, according to Cathie's projection. The biggest risk to the estimate, they believe, is whether traditional automakers will be able to effectively shift to electric autonomous vehicles. Aside from this reasonable issue, the prediction also emphasizes the falling costs of batteries. Battery packs for electric cars passed a major milestone in 2020, with prices falling below $100 per kilowatt hour. A thorough analysis shows that prices have dropped by 89% in just 10 years. However, you must realize that this was not a gradual fall. Rather, it was an exponential decline, and the more this happens, the cheaper EVs will become, and cheaper EVs will lead to broader adoption. The demand for electric vehicles will skyrocket, rendering the competition obsolete. As a result, it's a little surprising that legacy corporations have declared 2035 to be the year they'll go entirely green, and legacy companies aren't alone in this lunacy. Wall Street believes ARK and the EV industry's high forecasts are unreasonable, even when they've been proven wrong time and again. Tesla has disproved their claims, but it appears that it is still insufficient as seen by its inaction. There's a definite divide, and it'll only be a matter of time before everyone comes out of their denial and acknowledges the change. The advancement in EV charging rates is the next factor to consider. The ability to charge an electric vehicle quickly is heavily reliant on both the vehicle and the charging system, and once EV charging rates have reached a standardized level, ARK Invest believes the industry will optimize for other features such as autonomous driving, safety, and a variety of others. Another key reason why some potential purchasers are concerned is that electric vehicles will take a long time to charge. While most drivers are accustomed to filling their gas tanks in less than 5 minutes, EVs normally take at least 30 minutes to get 80% charged at the fastest charging stations, depending on the size and specs of the battery. However, in 5 to 10 years, faster charging may be achievable. New lithium-ion battery materials, as well as new solid-state batteries that are more stable at quicker charging speeds, are in the works. They can set recharging times to no more than 20 minutes. Returning to the economic issue, charging electric vehicles have become significantly more affordable. With petrol costs up 58% year over year, many people have pondered and switched to electric vehicles to save money. However, there are still some unanswered questions. People believe that electric vehicles are more expensive than gas-powered automobiles and that electricity has its own set of costs. The question they pose is whether going electric will be cheaper in the long run. Yes is the short and correct answer. Inflation is on its way. National policies are evolving to favor electric vehicles, and forget about the 2035 deadline. Once this administration is gone, that deadline will be pushed back. In fact, it's probable that it'll be cut while Biden is still in office after the market catches up with them. America does not want to be the only country in the world that does not have a 100% green policy. As a result, if traditional automakers do not successfully navigate the transition away from gas-powered vehicles, they may go bankrupt. Industry observers have been unable to comprehend how swiftly the switch to electric vehicles is taking place for years. Every year, they revise their forecasts to be more optimistic, but even the most optimistic estimates today do not expect that electric vehicles will account for more than half of the new car market by 2030. According to ARK Invest, the electric vehicle market share increased from 14.11% in 2020 to 8.5% in 2021. Even while the global pandemic limited the market for conventional cars and manufacturers grappled with supply chain difficulties, growth has been particularly spectacular over the last 3 years. In 2019, 2.2 million electric automobiles were sold globally, accounting for only 2.5% of the total car sales. The whole car market shrank in 2020, but electric car sales remained unaffected, reaching 3 million units and accounting for 4.1% of total car sales. Electric car sales more than doubled to 6.6 million in 2021, accounting for nearly 9% of the global car market and more than tripling their market share from only 2 years before. Electric vehicles accounted for all of the net growth in worldwide car sales in 2021. There are currently over 16 million electric vehicles on the road around the world, but they are not evenly distributed. Europe and China are the EV market leaders with 16 and 14% market share respectively, while United States has a 4.5% market share, which is dominated by Tesla. As we approach this new epoch, the last question we must address is who will lead the global EV age? Will it be GM from the 1960s or Toyota from the 1980s? The answer is self-evident, but since we're already here, let's make a case for Tesla based on the available evidence. Despite all of the competition in the electric car field, and despite the fact that some legacy firms are starting to notice, Tesla will continue to be the most profitable player in the industry for years to come. One of the most important reasons to start electric vehicles are their sole focus. There are, however, other causes. We can readily look into the previous work history. At the moment, the global first place goes to Tesla and the second place goes to Volkswagen because they're already the two largest manufacturers of electric vehicles and they're expected to keep this trend going by 2025. Elon Musk's Tesla, on the other hand, is outperforming every other electric car manufacturer in terms of earnings and will continue to do so. Tesla is expected to sell 2.3 million electric vehicles by 2025 with a $20 billion operating profit. Volkswagen, on the other hand, plans to sell 2.6 million electric cars at a profit of around $7 billion, meaning that even if they sell more cars than Tesla, they will not profit more than the Musk-led firm. And no company exemplifies this better than General Motors. It's estimated that they'll sell 800,000 electric vehicles and earn almost $2 billion from them. However, because these vehicles are made in collaboration with China, it's difficult to say how much of the amount we just mentioned they'll get. Tesla sold 500,000 vehicles and earned $721 million in 2020, its first full year in the black. However, selling regulatory credits to competitive manufacturers that need them to fulfill emissions regulations accounted for nearly $1.6 billion of its $31.1 billion in sales. Tesla will be the most profitable player in the electric vehicle industry for years to come, even as competition heats up. Tesla's significant profitability advantage will undoubtedly come from its software offerings, not from its cars. While Tesla's vehicles are already head and shoulders above the competition, they are still the only car maker capable of sending major software upgrades to their vehicles, and its autopilot driver assistance system, which can be enhanced over the air, is among the best in the business. So if you had to wager on the profit, would you go with electric vehicles or gas-powered vehicles? And if you had to pick a brand, would you go with Tesla or something else? Let us know in the comments below. Hope you liked our video. Please subscribe to our channel and remember to hit the like button, turn on the notification bell to never miss a video from our channel. Share the video as far as possible because the more you know, the more you grow. Goodbye.